Welcome back. Dubai-based Drake & Skull International has recorded a 63.1% rise in second quarter net profits off the back of new project wins and improved operating margins. The contractor recorded a net profit of 52.2 million dirhams for the quarter, up from 32 million in Q2 2012. So before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, Abu Dhabi Ports Company has announced a 17 million dirham investment for Marfa Port for the first phase of development of the port infrastructure and maritime leisure facilities. The port is at the north end of Marfa City, with direct water access to the Gulf in the Al Gharbia region, 125 kilometres west of Abu Dhabi. It is renowned for its excellent fishing, as well as its leisure boating and water sports, particularly diving. The investment is the first public realm project funded by the Department of Transport, which is to be implemented as a part of the Al Gharbia Master Plan, and the development will be split into two phases. The first will focus on the port facilities, installing floating pontoons for the fishing community that will provide 105 new berths, while enhancing the coastal protection with dredging and reclamation work. The construction work is set to begin very shortly, with the first phase being completed by February 2014. The second phase, which will begin in a few weeks, will focus on developing the landside infrastructure and new marina facilities. Majestic Marine Engineering has been awarded the contract for the Marfa Port development work. 48% of business leaders in Dubai are expecting better business conditions in the coming months, according to the Business Leaders Survey for Q3 2013, conducted by Dubai Chamber. The quarterly survey highlighted the improving trends in expectations for business conditions for the third quarter of the year, which continued to be positive, as 48% expected the business conditions to improve. 26% expected it to remain the same, while the other 26% expected conditions to worsen. Additionally, 48% expect improved business confidence, up from 39% last year, due to employment and access to credit and financing facilities for Q3, while 32% expect business confidence to remain the same. Highlighting the factors that will affect their business activities in Q3, the respondents said that keen price competition, payment defaults, a high cost of raw materials and rental increases are likely to affect their business activities as well as expectations. It was a mixed week for the financial markets, with a host of key US economic figures driving volatility. Data showed that US growth continued during the second quarter, with the US GDP trumping expectations at 1.7%, while the index for ISM manufacturing printed at 55.4, beating estimates. Wednesday's FOMC rate decision didn't throw up any major surprises, with the board maintaining its dovish undertones. But Friday's headline US non-farm payrolls report will surely cement the dovish sentiments of the FOMC. July's NFP report missed expectations, coming in at 162,000 new jobs, below estimates of 185,000. To get a closer outlook on the week ahead, we spoke with Gaurav Kashyap, the head of futures at Alpari Middle East.
Well, it was a really volatile week in the markets with a stacked economic calendar, and the US dollar did end the week on the back foot following a rather disappointing US non-farm payroll report. Earlier in the week, we did see that US GDP improved, coming in at 1.7%, and this was also backed by stronger than expected ISM manufacturing. But overall, that taper on sentiment was quickly diminished following Friday's US non-farm payroll report. Now, if you look closely at the numbers, the headline number did miss expectations, and we did see large downward revisions to June's report, which didn't bode very well with markets. We did see decreases in the overall unemployment rate coming in at 7.4%, but once again, this should not be misleading, because that was largely attributed to a decrease in the overall participation rate. So less people in the labor force, probably misconstruing that overall unemployment rate. What we do expect to see in the week ahead is this taper off sentiment continuing to take the US dollar weaker. We will see further upsides in higher yielding assets against the US dollar. Commodities should also be moving higher in the week ahead. The Indian rupee should find good support at 161 on the DGCX, and it will trade between 161 and 164.50 in the week ahead. Gold looks good to probably test 1340 in the week ahead, but overall we'll be watching the performance of the Australian dollar. Now, the Australian dollar has slipped from 0.93 levels against the US dollar. It has found some support around 0.8850, and we will be watching some key figures, including the Reserve Bank of Australia's rate decision, expected at 2.5%, and a host of Chinese data, which should keep the Australian dollar propped up in the week ahead.